Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be looking at why leverage trading Bitcoin is usually a great way to lose money. To do this, we'll be using a number of resources all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now we're just on the Bitcoin open interest chart, and what this is doing is showing us the total value of all Bitcoin derivative contracts open at any given time. If you haven't already, we have done a video on the Bitcoin open interest chart, so I'd recommend looking at that. But basically all it is doing is showing us the total amount of money, in this time in USD denominated terms, of Bitcoin derivatives. So that is futures trading or perpetual contracts, just anything that allows you to trade potentially with leverage and long and short Bitcoin at any given time. And what we can do on this Look Into Bitcoin chart is see the open interest over multiple different exchanges and how the open interest relates to the Bitcoin price. So what we can see here, for example, we had about $9 billion of open interest across these exchanges, while Bitcoin was at about $31,000 on the 7th of June. What we could then see is only 12 days later, as Bitcoin plummeted near 50%, the open interest dropped to nearly $5 billion. That is $4 billion in open positions wiped out. Now, this doesn't necessarily mean that every single one of these positions was liquidated, which is a term to say it got closed out by the exchange and the entire position was lost. A lot of these may have just been positions being stopped out as the market dipped, but regardless, $4 billion worth of positions removed from the market is a huge amount. We also actually have some data to back up how traders usually fare. The data we have is from traditional markets, but I'd suspect in the crypto market, these are even more startling. So this is on Business Insider, and what we can see is over multiple studies, we have figures ranging from 97% to 80% of all traders end up losing money on a long-term time frame. This exact figure is up to discussion. I've heard some say 90% of traders lose 90% of their money in 90 days. Some say it's around 80%, but regardless, a vast majority of traders lose money when trying to trade. If you then take into account that Bitcoin is not only one of the most volatile asset classes around, but then people are then leverage trading this 24/7 market, it wouldn't surprise me if this figure was significantly higher for cryptocurrencies. Not only is trading incredibly difficult, but a speculative asset class like Bitcoin and cryptocurrencies in general may be even more difficult. What we can also see is that by just simply buying and holding Bitcoin, 85.6% of the time would have been a profitable time to buy Bitcoin. So if 85% of the time buying Bitcoin has been profitable, yet over 80% of traders are losing money trying to trade Bitcoin, especially when trading with leverage, it seems somewhat counterintuitive to constantly try and beat the market when the odds are so much stacked against you. And bear in mind, this is from simply buying and holding Bitcoin. What you could do is implement a very simple on-chain strategy or market cycle chart strategy using a number of resources we have on lookintobitcoin.com, such as the MVRVZ score. Rather than just buying and holding indefinitely, and definitely instead of trying to trade actively every single day, every single hour using leverage, if you could just try and play the long-term swings, buying Bitcoin when it's potentially very much oversold and at a huge discount, such as in these green areas down here, and selling Bitcoin when it reaches this far overextended, overheated market conditions, such as when the MVRVZ score crosses into this red sell zone here, not only will you outperform buy and hold, but you'll likely vastly outperform trying to trade this market constantly, and especially when using leverage. So just to summarize, the data backs it up that a vast majority of traders are unprofitable, and while using leverage, these losses can be massively inflated. With leverage, if you were, for example, using 10 times leverage, every 1% price move in the underlying asset could potentially result in a 10% loss on your position. And then once you factor in that many crypto exchanges are offering leverage of 20, 50, even over 100 times leverage, where even less than a 1% price move could potentially liquidate your entire position, it's crazy to think that people are doing this on a day-to-day basis. Bitcoin and cryptocurrencies are one of the most volatile asset classes that anyone can trade, and with the daily price movements of crypto, leverage will only exacerbate these constant swings. And on top of all of that, Bitcoin and cryptocurrencies are a 24/7 market. Unlike traditional finance, which may be only 9 to 5 in your particular time zone, Bitcoin and cryptocurrencies trade without ever stopping, which makes it incredibly difficult to constantly monitor and manage your positions. So trying to then add leverage into the equation can only lead to liquidation. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth newsletters, indicator alerts, private trading view scripts, and more, all for a fraction of the standard industry price. And right now, as I film this, there seems to be a 25% off discount, so try and take advantage of that. Let me know what you think in the comments down below. Do you trade using leverage, or do you try and just stick to the simpler on-chain and potentially more profitable tactics of trying to just trade Bitcoin and cryptocurrencies longer term swings? Thank you very much for watching, and I'll see you in the next one.